Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Now let's have a look at some of the stocks on the move today here in Europe. I'm Caroline Hepke alongside Jemana Basecci, and we're joined by Bloomberg's equities reporter Joe Easton. Hi Joe. So look, up first, European medical tech firms got painful news over the weekend. How is that affecting them today?
Yeah, so we are seeing weakness in all of those medical tech companies today. So Siemens Healthineers is down around 1% at the moment, was down 2%. This is a maker of MRI machines. We've also got Phillips lower as well, and Carl Zeiss MedTech, the big ones, moving in the space. This is after news that Beijing will exclude EU-based companies from government procurement for certain medical devices. This is kind of the latest tit for tat between the Chinese and the European Union on medical tech. Analysts saying that it's kind of unsure how much this will affect the firms in terms of revenue, but clearly hitting sentiment today, and all three of those big health tech companies are declining this morning.
And oil giant Shell has seen its shares slide this morning as well. So drill into these bad numbers for us, Joe.
Yes, well, yeah, the headline I saw was a crude awakening, which I quite like as well. But so Shell is down today. Moving on from that, Shell is down 3%. A pretty big move for that stock, actually. This after the oil company's second quarter update pointed to weaker performance than anticipated, and that is likely to hit earnings expectations. Now, I'd read a note from Jefferies, and they were predicting potentially cuts to their earnings or earnings consensus among analysts of up to 20%. So really quite big numbers in terms of how bad this report is. It is, of course, all tied to the weakening crude price. That is kind of the main clear driver of this. The stock declining at 2.6% currently. On the one-year view, it's down 11%, and for a big stock like that, it is pretty negative news. So Shell down after that trading update.
Okay, and lastly, Stellantis hitting road bumps this year. There you go. I know it's all puns today. What's the market reaction?
So Stellantis, so Bank of America downgraded this one today. They've cut it to neutral from buy. They're predicting a very weak first half for Stellantis. Now, this is one of the world's biggest car makers, so Jeep, Chrysler, all those big brands, and also a number of Italian brands as well. They reckon over at BofA that it is too early to go bottom fishing on this stock because they think it has further to decline. On a one-year view, this stock is down 50%. It is all due really to competition in autos, a lot of that in EVs with China putting a lot of cheaper EVs onto the market. So Bank of America really reiterating that, predicting a very bad half year for the company, and the stock is down 3% this morning.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.